and welcome. You're watching the Newsroom on 80 now. I'm Anisha Jain, and for now the markets are fairly quiet, and I say that because we have been very range bound just between that 19,400 thereabouts is where we are trending at this point of time. The Bank Nifty is underperforming today, so that's the index which is actually down a bit in the trading session. Having said that, Sensex is comfortably close to that 65,000 mark as far as the Sensex goes. The action really is in the broader markets, and a lot of result reactions is what we are seeing, whether it's in HPCL, whether it's in Apollo Tyre, JK Tyre seeing a rub-off impact, RR Kabel seeing the up move. All of these stocks are the ones which are watching out for. Not Apollo Hospitals, Apollo Tyres is the one that I'm talking about because that actually reported its earnings, so we should watch out for some of these stocks. Plus, Prince Pipes from the mid and small cap arena is also doing okay. We have Alchem Labs, a bit of a result reaction, Cadila Healthcare, Prestige Estate, Mankind Pharma, Aurobindo Pharma. So Pharma clearly in the pink of health right now, and that's one of the top performing sectors as well. But it's the time of Diwali, so let's bring in some Diwali cheer and welcome on board Vinay Jaising from JM Financials as well. Vinay, hi, good to have you on the show. And first up, Diwali wishes to you and your loved ones as well. Wanted to begin by understanding from you, is there a genuine reason for investors to cheer when it comes to the Indian markets and Indian economy, or is it going to be a bit sideways for the next 5 to 6 months?
I think there is a reason for the Indian investors to cheer surely going ahead for the next 12 months. Whether the market moves sideways in the next 1 to 3 months, I think is not going to be very relevant for a long-term investor. And I'll tell you the reasons why. First and foremost, if you look at any data point for India compared to, let's say, US, the GDP growth rate of India is north of 6%. US has had a growth rate of 4.9%, one of the highest ever. But they're trying to slow it down by cutting costs, by increasing interest rates. Second, if you look at just the GST numbers, the tax collection numbers, they are at their peak. Third, capex numbers on a year-on-year basis of what the government has been spending is up north of about 35-40%. Fourth, if you look at the results of the 350 odd companies which have come out, I haven't seen a time wherein you're seeing a year-on-year growth, if I include financials and energy, of as much as 60% on the bottom line. Even if I were to neutralize financials and the energy space out of this space, the overall growth on a year-on-year basis is of 20%. That may be about 4 to 5 times higher than what the rest of the world's stock earnings are doing at. So clearly a lot of reasons for India Inc. and Indian economy to cheer about.
Lots of reasons actually to cheer, whether it's the economic data or the earnings, everything is looking positive. But what about valuations? Because Indian markets have managed to stay at a premium for a long time now. Do you think it's going to be attractive enough for the foreign money to come back? Because the FII flows have been very bleak this year. It's only the DI and the retails that have been pumping in money. Is that the trend which is likely to continue? Once we see that FII money coming back, there's going to be a further rally in the markets.
So well put by you. If I turn forward the clock by 1 year, you'll start seeing debt money come into the country, courtesy JPM, India being included in that. So you'll see about $20 to $24 billion coming from that. From now to then, there are two events. One is an event of election, and the other is, the geopolitical risk. Keeping these two events in mind, the second one is not in our hand. Having said that, the third big risk India has really is crude. With crude softening and with India's tie-up with Russia, we will start seeing forex reserves keep on improving. And I think that will be the single biggest advantage India has compared to its past, which also will lead to global investors realizing that the biggest risk for India, on a longer term basis, which was crude, courtesy their tie-up with Russia and softening of oil prices, you probably could see a lot of inflows coming in. Having said that, just one correction point I would make is, yes, FIIs have taken out, a couple of $billion, $4 billion in the last 2 months, but they're still north of $16 billion FITD. The FII ownership today is at about sub 18% for the overall market. That had peaked over 21%. So there's a lot of catch up with FIIs could also have of 2 to 3% on a $4 trillion market cap country. So 2% catch up is equal to $80 billion. So I'm hoping, courtesy the earnings growth of the country, the FIIs would look into that and start looking at India only as against comparing them to the other emerging market, which is where you're seeing a lot of outflows coming. Because FIIs are getting out of emerging market, India being partial pie of that, 12 to 13%. They're taking that money out in the last 2 months. But I think that will reverse seeing the India earnings growth.
Let's see when that reversal does really play out. But Vinay, I was just going through the themes that you like, and looks like Make in India is something that you're positive about, and especially when it comes to the chemical space as well as healthcare. Talk to me about where do you see opportunity within these sectors?
Couple of names, first starting with the chemical part of it, the specialty chemical part of it. India, there's a company called Archean, which gains purely as bromine prices go up. Uh, uh, Unfortunately, because of the war at Israel, you've started seeing bromine prices move up. Archean is the cheapest producer of bromine virtually in the world. It gets it from Gulf of Kutch. Stocks trading at about 10, 11 times 1 year forward earnings, and bromine prices are close to bottom. So, we see Arcane doing pretty well. Another chemical name we really like is Tatva Chintan. Tatva Chintan, has two stories. One is the company is growing on the flame retardant part, but the second one, which is even more interesting, is the company is getting into electrolysis and will soon start supplying uh, chemicals for hybrid and EV cars. So two strong names coming in out there. Very strong, robust growth of 25% for Tatva Chintan in the next 2 years. We like these two in the chemical space. In the pharmaceutical space, there's been a listing of Concord Biotech a couple of months ago, a couple of, less than 2 months ago. And we really like that name largely because A, it's a global leader in the fermentation technology. It's used in autoimmune, over 20% market share. Globally, over 50% market share domestically. Uh, Earnings growth of 25% CAGR for the next 2, 3 years and inching up. So very exciting times, I think, for the pharmaceutical and specialty chemical space as far as we are concerned.
Sure, that's about Concord Biotech and Tatva Chintan, but I also see names like Kirloskar Oil Engines in your list of preferred ideas. I understand you're bullish when it comes to the capex theme, but if you go by the earnings that Kirloskar Oil reported, didn't look very enthusing at all. Worried at all?
So I think of it this way, right? If you look at the results purely as what came out from the result, one way of looking at it is it had a very slow growth in revenues. But the other way of looking at it had a growth in revenues after a big pre-buy last year. So if I look at the last 2 years CAGR on top line, 30%. Despite that, the company has grown this quarter, and the company is very confident on two counts of what it will do in the next half. The first count is it's increased its number of products it can use, so it's moving up the KVA cadre. And second, it's doing really well on its financial NBFC, which is ARCA, which is close to 4,000 crores. So I'm looking forward to some news out there as well. So clearly at 11, 12 times 1 year forward multiples, a change in management which the company has done. It's now having CEOs in each division. Its after-market business is really doing well. Margins are very high out there. One of the cheapest stocks in capital goods, very ticks the box for us in virtually India's capex growth story. Make it India story because you'll buy engines from your large, more domesticated part of the India business, moving up the value chain, and probably something happening on the NBFC front. So lots of positives as far as Kirloskar Oil is concerned.
Sure, and before I let you go, I would also like to ask you your thoughts on Varun Beverages. The stock is sitting at all-time high level, record high for that one. How much more upside do you see?
Let me just tell you I'm using your question of Kirloskar Oil on Varun Beverages. Here's a company which grew on, FITD levels. It's a calendar year ending company. So if I look at it in calendar year ends for the last 9 months, the company has grown on the top line by 20%. EBITDA has grown 30%. Bottom line has grown 40%. Clearly way ahead of expectations of anyone's estimates. It's moving up the value chain, in the cola drinks. It's moving up in the value chain in energy drinks. It's selling far more water than what you and I can imagine. So the overall growth story of Varun in the longer term is getting difficult to decipher for an analyst or a fund manager. If we thought FMCG names were growing at 10 to 15% on the top line and probably 12 to 17% on the bottom line, it's challenging earnings estimates substantially. And when a company challenges earnings estimates substantially, and it's already close to north of 25% in terms of return capital employed, so giving you a lot of good ratios, I think it becomes a must-own company. So yes, it is at all-time peak, but its earnings growth is not slowing down, which is what we like about Varun.
Slowing down at all, and that's why more legs to that one as well. But Vinay, it's Diwali time, right? So I have to ask you one Pataka stock idea apart from the list that we just discussed. Anything else that stands out and where you see value?
We are very bullish on the capex cycle. I won't give you one. I'm going to, try to talk about two or three sectors. One is capex. There are many names out there. If you look at water, there are companies like Viatech Wabag, which is trading at sub 10 times multiples. If you look at defense, these are long-term growth stories. There was a company, Bharat Dynamic, which slipped its numbers last quarter because it didn't get supply, and here, it's got back to its earnings growth of north of 30%. Our analyst is talking about a 60% growth in earnings for Bharat Dynamics for the next 2 to 3 years. So lots of names in capex linked to what India is trying to do, increase domestic growth. So this is something we are very excited about.
Okay, Vinay, on that note, we'll let you go. Appreciate you making time and speaking with ET now. But it's time now to take a breather on the show. Don't go anywhere. When we come back, we discuss more Diwali cheer, but this time with Sanjeev Sanyal.